Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a little bit about some of the common foreign account reporting and compliance mistakes and how you can fix them. It's a 2025 update to a previous version we published a few years back. So baseline perspective, who has to file these foreign information returns, FBARs, Form 8938, Form 3520, etc., etc. You've got your U.S. citizens, you have your lawful permanent residents, and you have your foreign nationals who meet the substantial presence test. Typically, this is going to be visa holders like an L1, H1B, H4, EB5, B1, B2. It's not just for employment. And actually, you don't even have to be a visa holder if you meet the substantial presence test, but usually it is. For citizens, there's not really much in the way of exceptions, but for certain permanent residents, you may qualify for a treaty election. If you live in a foreign country that's a treaty country and you meet certain requirements, and if you meet the substantial presence test, there's a few different exceptions. Common one is closer connection. So for taxpayers who have to file these forms, what are some of the common mistakes, right? And this is common mistakes for all the different forms. It's not specifically for FBAR. We have a separate presentation on that because the FBAR, of course, is the most common form. One common issue is only reporting bank accounts, because a lot of times when people hear about foreign reporting, they hear about bank accounts. But foreign reporting is not limited to just bank accounts. It includes things like investment accounts, foreign life insurance policies that have a surrender value, pension plans, stock, equities, things of that nature. Another common issue is not reporting foreign mutual funds and ETFs on the proper Form 8621. So a lot of times what will happen is someone will have like a mutual fund account, let's say a securities account with a bunch of funds in it. The account itself is typically listed on the FBAR with the maximum account value. But most of the time, those funds are also going to be reported on Form 8621, which is used to report PFICs, which is passive foreign investment companies. Even if no dividends have been distributed, even if there's no excess distributions, unless an exception applies, taxpayers will have to duplicate the reporting on both the FBAR and the Form 8621. And in fact, if it's kind of like a hybrid account that has funds and other type of investments, they may also have to file the 8938. One other very common issue we see here is failing to report foreign pension accounts. A lot of times this is because the IRS had published an article a few years back making it sound like foreign pension plans aren't reported. What they really mean is things like IRAs and 401ks that have foreign investments in it. You don't have to do an FBAR and parse those out because it's a U.S. account. But if you have things like an Australian super or a Singaporean CPF, a Malaysian MPF, EPF, Hong Kong MPF, these are all reportable. You could see a little bit more about that for the FBAR in publication 5569. For the Form 8938, you could just see the IRS instructions. So what happens when you have not filed and you want to get into compliance? There's lots of ways to do it, but a lot of times people will approach us because they're not sure what to do or they've made some mistakes. So let's talk about some of those common problems as well. One unfortunate problem is receiving bad advice from another attorney or CPA. A lot of guys and gals pretend to be experts. They've never written anything about international tax. They read an article or two and suddenly they're an expert on YouTube and Instagram and all these other things. So it's not uncommon if you got some bad advice. It's typically fixable. Sometimes you won't know that you've gotten the bad advice until later in the process, but just know if you've gotten some advice, you realize later it's not accurate, you can fix it. And one common type of bad advice is doing the quiet disclosure, where a taxpayer will either mass file prior year returns in FBARs and other forms or start filing forward without properly getting into compliance. Another common issue is an incomplete streamline procedures. Taxpayers will come to us and go, hey, we found this firm. They didn't charge much money. They did our FBARs and we're still waiting to do the streamline procedures and they haven't submitted the returns yet. Well, that doesn't work. It's all supposed to be submitted together at the same time, kind of one fell swoop. And if you put those FBARs out there and you don't do the streamline procedures in full, then you're risking fines and penalties. If you get hit with fines and penalties, you don't get the protection of the streamline procedures, and you can't submit to the streamline procedures once you've been penalized. So if you're one of those taxpayers, either you've not gone into compliance or you did something and you want to fix it, you're not sure what to do, realize there's various amnesty programs, the IRS calls them, offshore tax amnesty, offshore disclosure programs you can use to get into compliance. The common ones are the streamlined filing compliance procedures, domestic and foreign. It's all for foreign or offshore accounts, but domestic and foreign depends on Whether you're a U.S. resident or foreign resident, you may qualify for the delinquency procedures or reasonable cause. If you're willful, typically you're going to do the voluntary disclosure program. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.